Welcome to Capitalizing Your Life, the podcast that shows you how to take control of your money, build lasting wealth, and create financial freedom using the infinite banking concept. If you're ready to make your cash flow work for you instead of someone else, you're in the right place. Here's your host, Glenn Yaney.
Today, my guest is Logan Hertz, host of the Hazeltine LLC podcast. The place where I found Logan was on YouTube, and he goes deep diving into velocity banking and the infinite banking concept. Welcome, Logan.
Thanks for having me, Glenn. It's great to be here. How are you doing?
Good. You know, I was talking to Jesse Durham right before this podcast, and I told him that last time you and I talked, we had to split up the podcast. It's such a long podcast. But
always good.
It's because we could just talk endlessly. I love velocity banking, and I also love infinite banking as well. So I guess, has anything changed, or what's new in Logan's world?
Yeah, things are going well with my podcast and my business is growing. I think you used the phrase as we were talking pre-show about being in different seasons. I think as my understanding of the infinite banking concept has matured, I've started emphasizing more the importance of the death benefit. Cash value, of course, is still extremely important. The banking process, policy loans, all that, very powerful. But it all flows from that permanent death benefit. And this is why I've started talking more and more about the value of convertible term. So when you're considering whether or not you want to get life insurance, what kind of life insurance you want to get, pretty much regardless of which direction you ultimately go, convertible term with the right carrier and the right agent keeps all your options open. So a convertible term life insurance policy is term life, so it's relatively inexpensive, right? But you have the option to convert it without underwriting. So first of all, it protects your family if anything happens to you in its term, so you can get a large amount of death benefit. You can get the amount of death benefit you need, right? Because when we're designing a whole life insurance policy for infinite banking, it would be unusual for that to have enough death benefit to cover your family, because we're kind of trying to reduce the death benefit, ironically, to increase the cash value, right? So you need to supplement that with some term to make sure that you have enough to protect your family, God forbid anything happens to you. And that it also protects your insurability, right? So today, hopefully, you're young enough and healthy enough to qualify for life insurance. That might not be the case tomorrow. Or maybe tomorrow you can still qualify, but instead of getting a preferred rating, now you only get a standard rating because you gained a few pounds or you had some health issues, right? This happens all the time. Nobody believes me when I tell them this, Glenn. Nobody believes me. But it is possible that something negative could happen to your health. It is possible. It is possible. But the people I speak to have been gifted with invulnerability, which unfortunately I wasn't gifted. The life is so unfair. So they don't need these crummy insurance policies,
Yeah, so, I mean, really, if we're thinking about building your own banking system as well, we're kind of creating a runway
Exactly.
to allow you to be able to build out that system.
Mm-hmm.
And for me, you were actually the person that told me that I should get, at the time, I thought it was ridiculous amount of life insurance. And I ended up doing it. But I can tell you the problem that I have, and I think most people have, is that I think linear. So to get to, say, if my $1 million policy that I have, over time, as I'm funding into this policy, the cash value gets to, say, 5 million when I'm 70. I think to myself, what am I going to do with $5 million cash value, and how would I pay that back? And that's where the exponential aspect comes in, is that I'm constantly borrowing from this policy and buying cash flowing assets to flow back into the policy.
Mm-hmm.
So where we're talking about is the unseen,
Mm-hmm.
and that it turns into this $20 million, $25 million real estate portfolio that is now considered the unseen portion of the illustration that we can't even predict.
Right.
And then, so in that scenario, it's like, if that's what's happening, the amount of premium I'm paying today is most likely not going to be enough premium that I need to keep funding into my policy.
Yeah.
So that's where the term policy comes into play.
That's right.
And I can convert more of that term into a new policy to build out my banking system.
That's exactly right. Term gives you optionality. Optionality, right?
Yep.
You're in real estate. Think about it this way. Let's imagine there's some property out there that you think, hey, I might want to buy that, but I'm not ready today. I don't have the capital, but I might want to at some point in the future. What if you could slap down a small amount of money to get a guaranteed future purchase option? Where now on a guaranteed basis, you can buy that property at the current market rate And you're locked in with your current excellent credit score where you can get the best financing, the best interest rate available. And you can do that anytime over the next 10, 20, or 30 years. I think most real estate investors will be willing to pay for that kind of optionality, right? To know that I can actually get access to that deal. It's the same thing with life insurance. So convertible term is taking the first step towards securing your future net worth, right? So the first thing I educate my client on is what their human life value is. Human life value is, you can think of it in two ways. The protection aspect is, this is the financial loss to your family if you die. And I think most people dramatically underestimate the financial loss to their family if you're gone,
Yeah.
right? And they think, oh, that's a ton of money. We'll never need that. Really? Really?
Yeah.
You know, think about what it would take to replace your, and simple, right? So for most people, replace your income, right? What's the financial loss to your family if you die? Well, they lose your income projected over your normal working life, let's say 30 years. So if you're 35 years old, you make $100,000 a year and you're married with children, if you die, what is lost to your family? They lose your $100,000 a year income projected over the next 30 years. That's actually pretty conservative when you think about it. It's not accounting for inflation. It's not accounting for increases of your salary or anything like that, because a life insurance company is only going to protect what you're worth today, not what you might be worth tomorrow, right? So, and it just keeps all your options on the table, like we talked about. So that's the financial loss to your family. So $3 million, it's the protection aspect, but it's also the future net worth aspect. Because the other way of looking at it too is, if you play your cards right, you should be worth $3 million, 30 years from now, right? So why don't you secure your future net worth today on a guaranteed basis? So once you take out that $3 million convertible term policy, you put out like a temporary pontoon bridge to your $3 million future net worth, right? So if anything happens to you over the next 30 years, your plan will be completed. You will be worth $3 million. And then what you do is, over the next 30 years, you convert that $3 million to whole life insurance. So now that pontoon bridge becomes a permanent bridge, right? It's filled in with wood and cement, right? So that $3 million becomes not a temporary death benefit that probably won't be paid, but a permanent death benefit that is guaranteed to be paid at some point in the future, right? And then the last step is that $3 million eventually becomes liquid and accessible to you in terms of the cash value. That's you actually walking across that bridge and getting to the $3 million number. And you did all that on a guaranteed basis without taking on any risk. And this, by the way, doesn't prevent you from investing in other things. You should be investing in other things. To your point, Glenn, one of the best use cases, I think, for cash value in a life insurance policy is borrowing against it to go and buy other cash flowing assets like real estate. And then you can use the cash flow from that real estate to pay back the loan, right? And that is the banking process, right? Borrowing against your policy, investing in something, and there's a lot of benefits to using a policy loan rather than financing in other ways. But again, it's not an either or scenario. You can use bank financing if you want, and none of that interrupts the growth in your policy, right? So
Yeah.
the purpose of case design, as I view it, is this. This is, I think, my unique insight into the infinite banking concept. My contribution is that convertible term should not be viewed as a supplement to your banking system. It's actually part of your banking system, right?
Yep.
So what is the purpose of case design? When we get clear on this, it becomes clear where convertible term sits in. The purpose of case design is not to maximize the cash value, okay? It's not even necessarily to maximize the death benefit or anything like that, or to maximize rates of return or anything like that. No, the purpose of case design is to secure for you the contractual right, but not the obligation, to pay the highest possible premium for the longest possible time frame. Now, there's a lot there we could go into. We won't get into it for the purposes of this discussion, but I think the number one problem we all have to get over is we have to stop seeing premium payments into our policies as a liability. That's a self-limiting belief that's going to prevent you from expanding your system, right? Now, I have to be careful how I say this, because premium payments are not literally deposits into a bank account. They are premium payments, okay? But we should think of them more that way, in the sense that you're putting financial energy into something that's growing, that you can access and control. It's not money that's leaving your personal economy. It's going into an asset that you're building. So convertible term secures that right to pay that premium in the future. I take out my first whole life policy today. I'm super excited. Then 5 years from now, I'm ready to take out my next policy because I'm doing well and I'm ready to expand my banking system. And it turns out, now I'm not insurable, right? I could lose my insurability for any number of reasons. It could be family history. It might not be anything you're doing. It could be your driving record. It could be something health-wise that happened to you. It could be something financially. There's not just medical underwriting, there's financial underwriting. If you had some problems with your credit score, that can come up in underwriting, you know. So you want to secure that right while you can. And so for me, the first step with all my clients is securing your full human life value with a convertible term policy. I did a whole video on this because there's a lot of nuances to convertible term. Because again, so many times people will hear me on a podcast and then they'll go and just try and do it themselves or do it with whoever their quote unquote advisor is. And invariably, they do it wrong because there's actually a lot of nuance there, right? And there's a lot of confusion. And it makes me sad that people will hear an idea from me and then implement it with someone else.
Yeah.
And invariably, it's not done correctly. One of the things you brought up, Glenn, I see this a lot in the infinite banking footprint, is people will come to me and they've started doing the infinite banking custom. They have a very well-designed whole life insurance policy that they're excited about and they're using it, but it doesn't have enough death benefit to protect them and their family. And there's no supplemental convertible term policy, right? And a lot of those agencies, quite frankly, haven't learned how to do term properly because they're focused so much on whole life, which is great. But there's actually a skill to term as well. I've learned that. There is a skill to convertible term life insurance. I know I'm rambling here, but this is important. One additional nuance, you brought up a company. There is one insurance carrier out there that has good infinite banking style whole life policies that has convertible term with living benefits. What does that mean? Well, normally term doesn't really have any living benefits, right? There's no cash value for you to use. You cannot access the death benefit while you're still alive, right? The advantage to the convertible term is you can convert it on a guaranteed basis. And by the way, even if you're still perfectly healthy when you convert it, there's still a benefit because it's now much more convenient. You don't have to go through underwriting again. It's a very easy process.
Yeah.
But what I mean in this case is it has long-term care protection. So in the event that you have some kind of long-term care need, which means maybe you develop a severe cognitive impairment, or you're unable to perform 2 out of the 6 activities of daily living, or you have a critical illness like heart attack, stroke, or cancer, you can access that death benefit on a term policy. That's a phenomenal piece of added protection. And when you look at the cost, it's ridiculously cheap, in my opinion. And that I hope is going to become more commonplace in the industry. The same way that whole life insurance policies come with chronic illness riders now, pretty standard with the companies that we work with. I hope that they're going to start adding them to the term policies as well.
Hey guys, if you'd like to learn more about the infinite banking concept and how to flow your capital through your own financing system, my team and I are here to help. With over 35 years of experience, we can guide you in building a properly structured whole life policy tailored to you and your family. See the scheduling link below. Now, back to the show. Yeah, so the whole convertible term, when you're thinking about creating a banking system, it's like, I was thinking about in 2012, it was the first time I ever heard about infinite banking. And I believe the policy was around $12,000 annual premium. And I remember being like, that would be a lot, putting $1,000 in a month. And now I look and I'm doing a lot more than that. And it's just an example of just when we're thinking linear, we don't think that our income is going to grow within life, and assets are going to cash flow better. You're going to have windfalls of assets. It's like, if we believe in this infinite banking concept, it's like, if I'm buying into a bank, like literally if I were buying shares of a bank, I would want this bank to be able to expand as big as it possibly can.
Mm-hmm, mm-hmm.
So that kind of goes to the convertible term, where I know that, like, for me to convert all of my term, it would be a lot of premium. It'd be like $300,000 a year. And I would say that I fully intend on funding $300,000 a year. I have a mentor that makes more than that in a month. So it turns into, like, we have to believe in ourselves. And I believe infinite banking concept creates that system to where we have to really believe in what we're doing. And then also know that if we are focusing on building our earning potential, we're focusing on cash flow assets,
mm-hmm.
These are things that are going to grow exponentially. So for that to happen, we're going to need more death benefit. And the other thing I was thinking about also is the amount of a healthy reserve in 2012 compared to what my idea of a healthy reserve is today. It's probably like 10 times bigger than it should be.
Right.
Or not than it was in 2012.
Right.
So
Yeah.
If I thought,
Could look at Warren Buffett. Warren Buffett carries more cash than anybody else because it's not just having cash is not just defense, it's offense too, right? Because great deals don't come along every day. And so what I see from wealthy people, savvy investors, they're not dollar cost averaging. Okay, that's not what they're doing. They're not like, "Oh, every month I just buy this certain amount." No.
no,
They start building up a strategic reserve in, as an example, whole life insurance, and they're just patiently building that capital in a safe, guaranteed, tax-free manner so that when the right deal comes along, and you'll know when it's the right deal. You won't need me or anybody else to push you into it. You will know when the right deal comes along. You can then pounce on it. This is what Marin Katusa does. This is what Warren Buffett does. This is what smart, disciplined investors do. And by the way, if you don't consider yourself a professional investor, there's nothing wrong with just building capital inside of a whole life insurance policy. It's not required that you have to take on risk. Because a whole nother rabbit hole we could go down into is the importance of human psychology, understanding human psychology. We can lay out a plan on paper that has you taking on risk in some kind of investment, and we can make up hypothetical rates of return, which are pure fantasy. But let's just grant those rates of return do materialize. The problem is that uncertainty in your plan creates financial stress. And if we're being honest with ourselves, that's not something we deal with very well. We don't make good financial decisions when we have that uncertainty. So don't feel the pressure to put your money to work for you. There's nothing wrong with just building safe liquid capital, especially if you are the sort of person who says, you know what, I don't really want to put in the time and effort to learn how to invest or to start a business or anything like that. Well, then don't invest, because if you invest in something that you don't understand, which most people do not understand, the S&P 500, mutual funds, retirement accounts, the stock market, they know absolutely nothing about it. So I wouldn't recommend investing something that you do not know very well.
at the same time, though, I will tell you, I met with about 22 business owners this past month. And what people generally come up to me, because I own a lot of real estate, they always ask me how they should invest in real estate. And my answer to them is probably you shouldn't invest in real estate.
Mm-hmm.
And they're
Mm-hmm.
like, it's like turns into what would be the reason for buying real estate is like, let's talk about
Mm-hmm.
your current situation. And just like what you were just saying, there was one person, she was an attorney and she wanted to start, she was like into sports podcasting.
Okay.
So she wants to create that. And I'm like, okay, so then
Mm-hmm.
why don't you start? Like, okay, what's stopping you from doing it?
Mm-hmm.
And then we go down this line of like, how do we get to where we want to go? And I asked all 22 of them, like, where do you want to be in 5 to 10 years? Maybe that's where we should start focusing on capitalizing your life, capitalizing it through your policy.
Mm-hmm.
And that capitalization
Mm-hmm. Mm-hmm.
creates the abundance to be able to take what we call is a risk. If you can see my hands, risk.
Right.
And
Right.
it's a risk of leaving your job or going out and buying the real estate if you'd want to, or paying off your cars, or really we're taking back control of our life
Mm-hmm.
and then having the launching pad to go do the next thing where we really want to do. It's like the thought of working at a job that this is what I did. I worked at a job. It drove me into the ground. It was grinding. And what I did with my money is I put it all into a 401k, IRAs. I put about $56,000 a year into my 401k, IRAs, my wife's IRAs, 401ks.
It's a lot.
And I couldn't figure out how other people were becoming financially independent with less money.
Mm-hmm. Mm-hmm.
But it's because all my money were going into different buckets. So if I create one bucket, then I can be more intentional with my money. And then also what I'm thinking, putting my money into the 401k, and people can do it. I mean, more power to you. But what I would say is I believe that there is mental actions that are happening when I give my money to a 401k. I'm losing power of my situation. I don't believe I can do it. I don't believe that I can go out and invest my money better. And then what I'm doing is I'm literally putting it into an index fund, which they're doing whatever they want with it,
Mm-hmm.
however they want to operate. Not saying that anybody's good or bad that's in the S&P 500, but at the same time, it's like, why wouldn't I give myself the capital to go do exactly with what these people are thinking that's best for them?
Right.
I can do what's best for me.
Right.
And what the infinite banking concept does is it creates discipline, because now I have to be able to borrow a line of credit against my cash value life insurance. So I'm holding this cash available. Like, so if I decide that I need to take 20 grand out, the question is always, I mean, unless you're not like an honest banker, you're taking this 20 grand out, you need to have some kind of payback structure. Like, how am I going to pay this back? Whether it pays the minimum interest until the investment actually works out, or like for me in this podcast and becoming a infinite banking practitioner and all this investment, that it's like I'm looking at this as like a 3 to 5 year play. Like I'm definitely in the red right now, but it's only because I'm able to take.
Oh, so you got into the business? Are you an IBC practitioner now? Did I hear that right?
Yes.
So you have your life license?
Yes.
Oh, okay. Very good. Yeah, no, that's awesome. I think that's a pretty natural path. Yeah, I think there's a few things I would respond to what you're saying is that
Sure.
how you spend your time is far more important than how you spend your money. So when we look at achieving financial freedom, let's forget about where we're putting our money. Let's back up and look at, how are we building ourselves, right? Because you are the asset ultimately. No one can make you rich except for the guy in the mirror. That's the only guy. Now, what tools you use to do that can vary. I mean, you could use a retirement account as part of your strategy, whole life insurance, real estate, right? All of these are tools that can have a place. But really, it's about creating cash flow. And so when we start putting money into a retirement account, I'm not saying that's good, bad, or indifferent, but you do give up liquidity, right? And so it takes cash flow away from you and it takes capital out of your control. So that is a drawback. Now, maybe the trade-off is worth it, but that is a drawback. So, I personally, I think like you, the older I get, the more I value liquidity. I would much rather stay liquid. And if that means I give up some potential returns or I pay more in interest, I'm totally fine with that trade-off. I'm probably sitting on more cash right now than I ever have before, and I'm very happy about it, right? I'm not worried about putting my money to work for me. When the right deal comes along, I'll know it. No one's going to need to push me into it.
Now that you've said it, they're going to be calling.
I get real estate deals. Well, I get real estate deals coming across my desk all the time, and I'm always saying no because I don't know how to evaluate them. Just no. I know it's not the right deal for me.
What's keeping you from investing?
Well, nothing's keeping me from investing. My best investment is in my business, right? Like I just said to you, no one's going to need to push me. There have been multiple times where I pounced on opportunity because I'll know.
Yeah.
I'll know when it's the right opportunity. So I'll give you an example of what it could be.
Perfect.
In my space, there are a lot of aging financial professionals who are looking to retire. And their kids don't want anything to do with the business. No one wants to be in this business. Everyone hates it, right? And so they're looking for someone to give the business to. And they could just sell it, but they feel a sense of responsibility to their clients. And they don't want to just sell it to anybody. They don't want to sell to private equity or something like that. They want to find someone who would be the right fit. And if they can find that person, they probably would be willing to sell it at a significant discount because they've already made their money. They've done just fine. They're not worried about it. That is the sort of opportunity that would make sense for me because I know how to evaluate that kind of business. I know how to leverage that business. I know how to run it, right?
Yeah.
And so for me, I'd be very comfortable, even if I overpay. I've talked to other guys who bought businesses like these, and they always said, I'm not worried about the price. If I overpay, I know how to make income in this business. So if I overpay, it'll take me a little more time to amortize that initial investment, but I'm still going to do fine, right? So that would be an example. And so I would encourage people to resist the urge to put your money to work for you, right? Instead, just build capital. So people jump straight to investing, but they skipped a step. You need to save before you invest, right? So I have my pyramid. At the bottom is protection. Okay, that's your insurance protection. That is your estate planning. Okay, life insurance, health insurance, liability insurance, just having basic protection in place. Okay, I think estate planning is one of the ones that's missed most commonly. Then next comes savings, right? Then you start saving your capital, hopefully in whole life insurance. But if you don't believe in whole life insurance, put it in a savings account, in gold, in Bitcoin, whatever you consider to be a safe, liquid, accessible place to store your capital. But you're not investing. And then when you do go to invest, you'll be able to do it with a lot more confidence and a lot more discipline because you'll have that safe foundation. And what you find, here's what I'm coming to, it's not about money. The best investments I've ever made cost absolutely nothing or very little. The best investment I've ever made was starting a business, and that cost me almost nothing. I mean, very little, right? To get up and running, to get the licenses going. It was more about the sweat equity that I put in, the hustle that I put in to learn how to do this, to build it from scratch, to get over the fear of rejection, right? To get over the fear of failure. All these are non-monetary investments. So when people ask, how should I invest my money? You're asking the wrong question. That's the question you ask after you've built the cash flow and succeeded, right? And at that point, it really doesn't matter as long as you're doing something reasonable with it, right? So ask more questions about yourself. Who are you? What are you good at? What do you care about? And then I would also say it's ready, fire, aim. Understand you're not going to start a business or invest and be good at it right away. You're going to fail. You're going to have failures, and that's okay. That's learning. I've made multiple financial mistakes where I've lost money. Everyone I speak to who got rich, it's not like they never made any mistakes. It was that they didn't let their mistakes stop them. They just treated them as learning activities, right? In my line of work, it can be very tough, right? I know you're a little different because you already had income from real estate and other things, but the failure rate in the life insurance business is extremely high. But it's more about what suits your investor DNA. So when you find something that you care about, find a way to turn it into a business or an investment. That would be my recommendation. So think about, who am I? What do I like to do? What do I care about? What am I passionate about? And find a way to turn that into cash flow. That's what Dave Ramsey did. Dave Ramsey recommends his clients, buy mutual funds, do retirement accounts. That could be a good thing to do, but that's not how Dave Ramsey got rich.
Yeah, I was going to say, watch what he's doing, not what he's saying.
He got rich because he started a business doing something he's passionate about, helping people get out of debt, right? And he invests a ton in real estate. So
I actually do love Dave Ramsey, and I think, but there's a lot of missing pieces of his puzzle, unfortunately. I think that it's like there's so much that could be improved. But what I was thinking while you were talking is that kind of like with me, I have 100 episodes of The Millionaire Journey.
Oh, congratulations.
I no longer film The Millionaire Journey. All I do is capitalize your life, because I started thinking to myself, what was the purpose of starting Millionaire Journey? It's to show people how to become financially independent through like investing in real estate.
Mm-hmm.
And then it started becoming the question of like, I got a lot of people that ask me like, hey, about this real estate deal, this, or can I get, invest with you and stuff like that. And my thought was, you don't need to invest in me. You need to invest in yourself first.
Right.
And I thought that I was like, almost like I was leading down this path of like,
right.
Do you give your money to a syndicator? And it's funny because they say, do what the 1%, this is how the sales pitch happens, is do what the 1% do, invest in private equity syndications.
Mm-hmm.
But the problem is the 1% did something before that. They created a business out of their own,
mm-hmm.
created the business income,
mm-hmm.
and then they have so much money that they have left over. Then they start doing the passive stuff. That's stuff that's less efforts and less focus.
Exactly.
So I started thinking about that a lot recently, and I was just like, and then I came across infinite banking concept. I went down the rabbit hole and read 20 books, and I really got into it, and I realized that if there was one thing that I could tell anybody to do that would work, I would say it works for most people that have a little bit of discipline and that are able to save capital. That's whenever I thought this would be the route. And guess what? We're empowering ourselves to grow, to live our best lives, to grow our business, to be able to pay for our kids' college, be able to, take back control of our capital to help us sleep better at night. And it's like, I think that's what really everybody wants. It's just that it's so boring that we can't even handle it ourselves, like including myself. Like my goal is to like not buy any real estate right now. And I can't stop myself. I literally, I have 5 deals that are sent to me. I have 1 under contract, but it's like, all I want to do is just pause and just, take care of what I have. And what I would say
Warren
is,
Buffett, he says like, say no 99% of the time, right?
Yeah.
I'm always saying no because
So hard.
People are trying to pitch, my clients on various things. And I'm not going to let anyone in to pitch my clients unless I've already vetted it. So the answer to pretty much any investment is going to be no, or maybe it might be okay, maybe for this one person because it's in their wheelhouse. And I just make an introduction. I don't make any recommendations.
Yeah.
But again, we got to back up a step. Everyone jumps straight to investing. It's like, hold on. The whole premise behind that is wrong. What you're saying is I'm going to take some portion of my money that I can save and I'm going to put it into some vehicle that I don't have any control over and hope for some return. And everything about that is wrong. It's all about cash flow. So where are you coming up with the money to invest? Let's focus on that. How are you generating cash flow, right? And once we start building a cash flow, then you'll feel less of a need to go and invest it because you'll see your money is accumulating. You won't feel the need to chase after higher returns. You'll feel that growing it in a safe, guaranteed fashion is fine. And if you want to take some percentage of that and speculate or invest for a potential higher rate of return, that's fine, but it's not going to make or break you one way or the other. So I don't focus on return on investment. And so with my clients, I'm not licensed to give investment advice, but even if I were, I try to do things that give you concrete, tangible results today.
Yeah.
Not hypothetical results years in the future. Whole life insurance takes time, but it's not hypothetical. It's guaranteed, right? But things like taxes, right? What if we can find a way to save you $20,000 in taxes? I'm not licensed to give tax advice, but I work with partners who help, right? We just improved your cash flow by $20,000. That's real. That's money in your pocket. That's much more valuable to you than saying, hey, I'll give you a different mutual fund and maybe it'll beat the market, but it probably won't, right? So that to me is what happens, to your point, at the very end of your financial journey, after you've built the cash flow. So let's focus on how we're building the cash flow. Let's try to reduce the amount of money leaving your personal economy without necessarily compromising your lifestyle, just optimizing it and looking at areas you're probably not looking at, like taxes. Most people just think of taxes as, well, that's just something I have to pay. Well, let's take a look. Let's think creatively, right? Especially if you're going to start a business or get in real estate, you're going to find out there are tax benefits available to you that weren't there before. Think about something you're doing already as a hobby. Could you turn that into a nonprofit? Could you turn that into a business, right? One of the advantages to being a business owner is tax benefits, right? There are a lot more deductions you can take as a business owner or as a real estate investor than you can if you're a W-2 employee. But that's just one example of, let's stop putting your money into a black box and just hoping it grows. That's not how this works. How is your money flowing, right? I heard from Rick Rule, and this is what you hear from people who have really made it, is he's like, I have so much passive income, and he wasn't saying this to brag. He's actually a very humble guy. He's like, I have so much passive income coming in, I wouldn't even know what to do with it, right? Like, because he created the cash flow by investing in businesses, right? And by being a speculator, like really knowing what he's doing. And that income snowballs. And once you have the income, then you won't feel the same urge to put your money to work for you, so to speak, because you want to generate income, you want to optimize your cash flow, not chase after rate of return.
That's the one thing I've really kind of caught on to, the guys that are really killing it, that talk about infinite banking. When I say killing it, it's investment wise, not through selling life insurance, but it's like they are focused on control and liquidity. Those are the two things. It's like that's where financial freedom comes from, is control and liquidity and then cash flow. Mm-hmm. So we just need to protect the downside and then be able to keep playing tomorrow. Like we don't want to be setting ourselves up to be clobbered and be able to not make it to the next day or the next month. You're like, we're trying to build that tier one capital.
Right.
That's making it to where we're just playing a new game. It's a game that we're on a field that most people aren't going to be on.
Yep. And to tie it back to our original topic, convertible term life insurance, in my opinion, is the first step. It keeps your options on the table. Control and liquidity, the reason why those are so important is it gives you optionality. If you stay liquid, you have options. If you're not liquid, you don't have as many options. So when a great investment comes up, you won't have the capital to take advantage, right? When something negative happens in your personal life, you won't have the capital to tide you through that tough time, right? When you focus on staying liquid, then you have the optionality. Convertible term gives you the option. It gives you the protection, and do not underestimate the peace of mind that comes from having a large death benefit protecting your family. I've heard this from multiple clients where after I explain to them human life value and we get that convertible term policy in force, they feel so much better. And now you can make better financial decisions, right? You can run numbers on a spreadsheet all day long, and that's all hypothetical. But it's just like putting a diet and exercise plan on a spreadsheet. Okay, that's great. Can you execute on it? That's the real question. So putting that convertible term policy in force protects your family and secures your full optionality on a guaranteed basis to start building this banking system, right? And now you're starting from a safe foundation. So when you go to invest and when you go to build that business, you can do it with more peace of mind, knowing that if something happens to you, your family is protected, and you'll have that guaranteed option to start expanding your banking system in the future. If you're not ready today, that's okay, but at least you will have that option in the future.
Awesome. That's a great way to wrap it up. Where can people find you, Logan?
Yeah. YouTube, www.youtube.com/@Hazeltine LLC, Hazeltine LLC. I know it's not the easiest thing to spell or look up. I'm also on LinkedIn as well, but if you just look up Hazeltine LLC, most of my content is on my YouTube channel. That's sort of my primary educational platform, my primary authority platform, as Chris Kirkpatrick would call it. I'd love to hear from you. And then, my Calendly link and all that other stuff is included in the YouTube description.
Awesome. Thanks for being on the show.
Thanks so much for having me, Glenn. It was great.
Thank you for listening to the Capitalizing Your Life podcast. Please rate, like, subscribe, leave a comment, and share with someone who you think would enjoy listening.